Good evening, peoples. Let's jump in here on GDXY and GDX. All right. So it's moving down a little bit. Um, and next week should be fairly volatile as well, because I was telling you guys we have metals expiration. We do have Newmont earnings. I expect Newmont to do pretty well. They should blow out their earnings, but the sector, I can't tell this coming week. I think it's going to be volatile. So that could be good. So a lot of trades involved yesterday. So there appears, well, let me get into what they did and then I'll tell you. So we were 37.87 when we moved down to 37.39. So GDX was down 1.27. We were only down 0.89. Went from 1901 to 1884. And that's good. And that's primarily because we're not capped, right? We had those 39 and 34s. Now, kind of as I mentioned again, I'm not faulting the fund managers, but remember I brought up the big move up had already happened, the 39, 38. So I think they panicked a little here on this 38. Look where we closed. Again, it's not a horrible decision to take something off at even, okay? But they would have been able to buy that back for a penny or two. Okay. Now the 39s and 40s, they did, obviously. They actually spent 3 cents. But again, with this flex options market, it's not like the regular market. You have to call and you have to say, I want to buy it back, and they give you the bid and ask. It's not it's like a customized market for the big institutional players. So there's a little more hand holding in it, which I find kind of weird. Why wouldn't it just be all, yeah, at least that's what I've heard. I haven't done it unless you work for a big firm or a firm that has Bloomberg's or something and you play in this arena. It's a different arena. Whereas anybody in the retail space just going out into the options market, it's just bid and ask, and you put in whatever, and they can expire worthless when you sell a naked call. You don't really have to do anything. If it's real close, you probably don't want to take the risk it gets put to you or something. So you buy it back and you just accept if it's a penny or two. So anyway, they bought both of these positions back for 3 cents. Um, and let me show you the activity. So you see all of these trades here, right? So here are the buy to close ones, the 2265 contracts for 3 cents. And that's on the 39, 719. This is on the 40. So they bought all of their contracts at 3 cents. And then what happened, this is what I wanted to talk about. And I don't need to leave that sheet because there's too much. I'll just take you through the synthetic. So these are the two new positions. They closed these out. We captured, we had sold for 40, we had sold for 21. So we were up in the 97, 98%, right? We sold for 90,600. We captured 83,805. We had sold for 4620 and we captured 3960. So nice job. This is the one that, it's in hindsight, it's not a whole lot of money. And I'm not screaming and saying, oh man, they really messed up. They just thought it was vulnerable and they bought it back. Um, but it turns out they would have been able to buy that back for 3 cents or less because it was a 38, right? And we closed well below that. And we're below that all day. So not a lot of money, but it just point, it's my job to tell you what I see. Okay. So on the synthetics, all right. And this is where I was going to tell you guys something. So at first I was like, oh man, people bought in this fund like crazy. Look at this. Went from 550 to 1,250,000. We more than doubled. I'll give you the percentage on the holdings page. And then I thought about it and said, oh, okay, this is a new fund that's paid once, coming up on its second payment. this was likely a buy-in from YMAX because that's what they do. They buy into the fund. I haven't tried to figure out when they do that to go verify or something, um, but because they're not really giving us the trades. I could go look at their holdings and see if they added it, but it's not really necessary. It's a 95% probability and the numbers match. That's exactly what happened. But for just grins, I will go in separately and do that. So I'll report to you next time. But what that did was that brought in a lot of cash, right? When you sell that many shares. So normally their volume would have matched the week before. They would have sold 27.25, right? But then they sold an additional 35.55. So we netted a lot more money. And then on the synthetic, let's see, what did we do? I moved that from where it was when I brought it over and put it back. Here we go. Yeah, we added the same 6280. Now, what I'm not particularly happy about is we did all of this volume, okay, at the same strike price. So they didn't ladder this at all. So let's go look at that synthetic. And so that brought us cash, putting all these on, right? 160 something thousand. So we got a little fatter, a little better with those. But, 2.97 again. I think it's going to be a tame week. I think it's going to move a lot up and down. But we may pretty much stay in this range because Newmont's the only big guy I think that's reporting. We get a Nikio uh, Metals reporting on the 1st of August, so that moves into the following week. Um, and then there's a lot of players, I think, in the top 10. Now, there could be somebody else next week. We'll have to see. But let's go take a look at the 37. That's the active guy. So they left their other positions in place and they simply just put the 35.55 order. Let me just make sure. So they bought, they sold short, buy to close. Yeah, that's the only synthetic that they did. And in this case, we didn't make money, we lost money. Um, and it's not so much that we lost money, it's just when you're buying a 37 and you're already in the money. 37.39 is where we closed, so we were somewhere above 37. You're buying the call for more money because it has value already. The 232 has 39 cents plus the time premium all the way out to 920. So it just means we didn't put money in the piggy bank, we took a little out. But nothing horrible. Look at where we stand on our gain now with this many contracts and still being above the 37. Think how we were doing when we were at 38 and 39. But we have a 476 million paper gain. Now, this loss went up, right? It was like 400 and something, and now it was 420, and now it's 733. But again, if we move up over time, this is where the fund mimics being long the GDX, and it's only when you get capped on your weeklies that you get hurt. So this last week, by calming down, we won on our 39s and 40s. We basically broke even, lost a tiny bit on the 38. Okay, so let's jump in. I think I showed you this. Yeah. So um, this is the range, right? And this volatility has been moving up. As you would expect, because it's waking up. Even though it was a down day, the metals, I mean, gold went down 2 something percent. The miners only went down 1 something. That had been totally the opposite. Gold had been going up sometimes 2, 3, 4% in a day, and the miners are flat. So it's a good medium term signal. It doesn't always manifest itself right away, but I'm very bullish 3 months, 6 months, 1 year in this kind of a fund with these metals. Now, when they run, sometimes we're going to get capped. So there's multiple ways to play this. But overall, I think this fund will do well. If you want to be in something that, unless we have a big pullback in the general market, and again, when it's a pullback in the stock market, almost all stocks initially go down. It's just the sectors that are okay in a down environment and a recession are going to be the stores of wealth, Bitcoin, you know, gold, silver, things like that, commodities. So I'm very positive no matter what environment we get in over over time here. That's why I say this is a good future fund for you. Okay, so let's look. I don't, yeah, do we cover? So here's fair price, right? 1880. We're trading at 1884. Here's our current. We're up a little, right? So when they sold them, they collected, what did they collect? 27 and 30 something, but it averaged, yeah, 28 and 26 is the sell price here. So with it being 24.50, what was it? Being, yeah, 24.50, right? Then we're up 8.81 cents with a week to go. But we are close, so I'm hopeful. It's just a lot of contracts for this situation. I would have tried to ladder that. Now, granted, they wouldn't have got that much money if they would have gone to the 39. The 26 cents was probably 20 cents or something. But I would have chose to ladder it to give myself a little bit of room there. And here, because we bought so many more of these, we are even moving down, have 476. We don't have what we had when we were up at 38 and 39 earlier in the week, but that's okay. All right, let's go straight to payouts, guys. So here we are, we're better. These were 60 and 70 cents to the negative. Now our total income is no income, right? It's a loss of 22 cents. But our short call moved to the positive with selling all those contracts. So if we can win that and keep that and do a few more times and get over the next couple of weeks, get this synthetic where we roll it and we pull that 476, right? That negates that. So I could see us, if we move up to 38 or 39, we can get back and have an 80 cent payout or so. It's going to take some time for the fund managers to get used to how to play this thing and understand, what's transpiring. And our socio-economic, socio-political, global environment over the next, I expect massive volatility. So we could have big moves up and go. We could have big retracements. The one key thing, probably true for the stock market, is I see volatility. So volatility should drive the options up, which in turn means higher premium across the board. Okay, guys, that's what I got for you. Overall, I'm bullish, obviously, on the metals and on commodities in general, in a medium to long term stance. Okay, guys, not financial advice. I'm not a financial advisor. Have a great weekend. Bye for now.